Let's get started. We know there's risk in trading. Please don't always use trade capital only. You know the deal. Social media, best place to find me is right here on the YouTube channel, youtube.com/Chris Pulver. Verified Twitter account also at Real Chris Pulver. Facebook and Instagram, all those handles. All the goods. All right, I want to jump right in the markets. It's opening bell. We're at 425.79 on the SPY. It's been a pretty good week overall. Big earnings week to kick things off. We had some financials. We had some big moves on Tesla, and that was actually where we made some pretty good profits this week. So if I go to my equities on demand, I actually posted this yesterday in my Telegram channels for equities on demand and Delta Trader. Delta Trader's been a new course with new software since late July, and we've racked up a 56% win rate. We've netted about $17 a credit per contract, which is not too bad, and we will continue to pick and choose. I mean, really, it's day-to-day, week-to-week trading if something presents itself. So, nice active trading, and we've done pretty well so far. And I think the software is great. Having a lot of fun with it, and hopefully traders are enjoying the fact that we're making some good money. Equities on demand, a little bit more of a track record and history on this one. This has been around since I think like Q3, Q4 of 2021. I took it over entirely in 2022, and we have a 61+% win rate, 346 wins. We've made some pretty good profits over the last couple of years as well, navigating these tricky markets. Like 2022 wasn't exactly the easiest year, and we're still carving out some nice profits, week to week and month to month. So anyway, good stuff. Here is the week thus far. I'm curious to see how price plays out today. We're sitting at 425. I don't know if there's something short term. I still have a butterfly spread this week that worst case scenarios, if it's down below, 430, which it is right now, then I'll lose 38 cents. If I take the 38-cent loss for the week, I'm still up. I guess it'd be 73 and 395. So I can be up 73 cents. And the butterfly is probably going to be a partial loss. I mean, it won't be a full loss, but anyway, even if I lose the full 38 cents. And then we had 395 on Tesla. So $4.30 credit per contract for the week's pretty solid. And yeah, we'll just continue to plug away. So let me log into the YouTube channel. Say good morning to everybody. Hope everyone's well. Happy Friday. And earnings season is just getting underway. All right. Chris, good morning. Donna, good morning. Denise, good morning. Angela, Willard, Everett, Gary, what's happening, sir? Steve, John, good morning. David, good morning. FK, good morning. Jason, Jacob, good morning. Good morning and happy Friday. There we go. Okay, let's jump into the clean charts. We're sitting at 425. I'm curious right now, our original trade. Let me go to my Schwab account here, get logged in. So we had a straddle on the SPY. It was a 429 by 440, and the 429 is roughly 3 and change right now. It's $3. At the very least, it's $3.30, which gives us some profit. But if we have a little bit more premium baked into that, then let's see if it's worth. $4 would have been good. I closed it out for just over $3 yesterday, $3.15. And it was trading up to like 350, 355 when we hit the lows yesterday towards the end of the day. So let me just check on what this looks like. This is a 429 SPY and a straddle. So it was a 429 put and a 440 call. Right now it's trading for 360. So pretty good profit. If anybody's still in that trade, and I said this, yesterday when I took profit, it's like if you want to sit on to see if it pushes lower today, great. There's an extra, 30 to 45 cents of profit. I think it's worth protecting. I wouldn't try to get greedy on it. We've already pushed the weekly trading range on the SPY with a weekly candle that was around $12, and the average is like 11 and change. So the average is 11.31 from high to low. We have a high of 438 and a low of 425. So right around $12.70 on the week, which is pretty good as far as, good volatility. All right. Analysis wise, this is going to be interesting to see how this all plays out. Somebody posted in the Discord group, a little up channel, which also makes some sense. Let me bring up my drawing tool here. Morning, Ann. How are you? Matthew, good morning. So somebody had posted this, which is also a very important trend line to monitor. We said this the last couple of weeks. I mean, this 420 level on the SPY is really important. We do have some decent earnings coming in the next couple of weeks. We have our Fed on November 1st, which is a Wednesday, and it's really kicking off the month of November. So I just wonder if this area is defended or if this area is broken. I don't know. We're going to find out. We're going to trade it. We'll be positioned accordingly for it. But it really is a critical spot here for the S&P. Same is true for the NASDAQ, the Qs. This trend line is a little bit more aggressive, like so. We also did not. I think this trend line could be broken to the channel downside. Also on the daily time frame, the QQQ has not hit the 200 EMA. So I wouldn't be surprised if maybe we do. We work our way back down. We find this 200 EMA. We see if this channel, I didn't draw that very straight, but we see if this channel is worth defending, right? So if it comes back down to this level, finds the 200 EMA, does it rip back up in the short term? Like I said, we're going to find out. Okay, currency strength chart. Load up. I saw it was the CAD that was strong this morning. Let's go to dollar index, oil, gold, silver. I also had a chart alarm going off on Bitcoin this morning, which was nice. $30,000 on Bitcoin. We're looking at a couple of trades on the euro, dollar, pound dollar. We put in a trade this week in the flex trading room, a buy stop at 106.50, I believe. And dollar index, if this is correct, where it's high to low, a little indecision if we're going to push a little bit lower. This is open space for the dollar to correct. Midpoint of this broadening pattern is around 103 to 103.50. I mean, I think this is the correlation. If we're going to see a weaker dollar, that is probably the best thing to happen to stocks to finish out the year. We're going to have to see a weaker dollar. Okay. If I go to, I read something this morning that the yield curve is getting steeper. The U.S. 10-year has made a big rip the last few days. We're at 4.92. We are certainly closing the gap. Let me go to the 2 and 10. 10. Yeah, whatever. I'll just find it. There's a Y chart that usually displays it pretty well, but we're 4.93 on the 10-year. 4.93 versus 5.1. So we have gone from over 1% inverted to now 0.2%. So the yield curve is steepened a lot, and that 10 years making a pretty big run. So again, I don't know how obedient the yields have to be. If we're looking at bonds themselves, if we go to IEF, that's the 7 to 10. The SHY is the 1 to 3. Let's go short term. So short-term bonds starting to turn up a little bit on the daily. We've had some pretty good support from back here in July, and we have not taken out those lows. If we go to the TLT, that's the 20-year. The 20-year is continuing to just get pushed lower. So the 10-year, that'd be the IEF, push lower. So I'm curious. I think it's the 10-year bond. If we finish out this year negative, that's the first time ever in the history of bonds that we would have a 3-year drawdown. And part of me was like, you know what? That seems like a really good opportunity to buy. And it probably is. But then I turn around and I look at what are the yields and what are the returns when we have positive years in bonds. I don't necessarily see the bond market, ripping like crazy to the upside. And even if it does, let's say this 7 to 10 year bond, runs from 89 back to like 95. I mean, that would be a huge move on our chart, and it'd be like a 7% move. So I still think that just if you're looking for yield, if you're looking for gains, if you're certainly looking for alpha, bonds are really not the play. And let me see if I can find this. Let me find that 3-year drawdown. I know this guy posted it. Let's see here. There's the rapidly steepening yield, the spread between the 10 and the 2-year. That's the least inverted we've seen since July 2020. So like I said, we were over 1% inverted, and now it's 0.2%. That's global central bank rates, mortgage rates. I saw 8%. Yikes. Fixed mortgage 7.63. Home sales affordability is at an all-time low. National debt continues to climb like crazy. Used car index coming back down a little bit. I'm looking for the bond drawdown. Let me find it. Here it is. This is it right here. So 1928 to present. This would be the first time in history to have a 3-year drawdown. Now, what this made me think about was this. Even if we had this drawdown, it seems like, you know what, there's a good chance that after this 3-year drawdown, we're going to have some decent gains. It's true, right? I guess the difference is, are we excited? Let's say that we have this big stretch right here, right? So from 1932 to 1940, you have an 8-year period. An 8-year period that is annualizing somewhere around 4 to 5%. I mean, for fixed income investors and those that want, lower tax brackets and whatever, fine. But if you're looking for, if 4 to 5% a year doesn't make you happy, then I don't think bonds are the play. I mean, it'd be nice to sit in something that's like, you know what, for the next 5 or 10 years, I don't have to worry about anything. I'll just put it in bonds. Well, I mean, again, there's a pretty good run there. 2000 to 2007, pretty good run. It's still underperformed. I mean, if I compared 2000 even to 2008, that's pretty nuts, right? 2008, market's down 56%, and 2008, the 10-year Treasury bond is up 20%. That's why they say the 60-40 portfolio split works, but that has not been the case as of late. It's been underperforming like crazy. I don't know. I mean, obviously, this is a huge question mark, and you'd like to think that it's never happened in the history ever. So, is it a good opportunity to buy? It's possible. But buy at what return, right? Buy at annualized 3 to 4%, 4 to 5%, maybe, if you're lucky. But interest rates are going to change a lot. I mean, if there's any central bank movement, if there's any deviation from these higher for longer interest rates, then bonds will change, right? So yields come down, bond prices go up. I'm still curious about what percentage. I mean, I don't see. I mean, it'd be exciting to have like a 20% year, 30% year in bonds, but for the most part, you look at the averages, and I'm actually interested. I'm going to take a picture of this and just punch this in and do some averages. Like since 1928 to present, what's the average annualized return for a Treasury bond? I'm curious. I'll do the math. I'll find out. Because that way, at least I have some data to show, well, this is what the market's done over the course of 100 years, roughly. So, yeah, I'll do that later. Okay. Morning, Jason. Morning, Larry. All right. So that's bond stuff. Let's go dollar index. So dollar index, like I said, we're just on the cusp of a potential break. I told traders this week in the flex room, if we break below this level, there's a monthly pivot right below that low. If we get on the right-hand side of this trend line, breaking below 105.50, below 10500, I could see this coming back into the midpoint of this broadening pattern. That's 103.50. If the dollar is going to weaken, that would be a good way to finish out the year for stocks. Broader market might lift. Market breadth might be up. We might have a rally in kind of all things stocks, all things equities. So if we have a directional play, I'm certainly going to be after it. If it's still just, I'm not sure yet. Maybe the dollar doesn't break this level, right? Maybe the dollar's here, consolidates, heads a little bit higher, comes back to equal highs. Again, this broadening pattern is not a guarantee, but it is a fantastic pattern to look for. It's essentially a bull trap on the upside and then a bear trap on the downside, and that's why they're such good patterns. Because, selling high is a possibility, buying low is a possibility, and you're not really committed to, chasing the market or buying at terrible prices or selling at terrible prices for that matter. So if the DXY breaks below 105.50, I'm a seller. We put in, like I said, a pending order on the euro dollar. 106.50 is a pending order. I've got that chart alarm set, and I'm looking to see if we just do this. We break a trend line, push up here. Halfway is around 108 to 109. We put a take profit conservatively at 108. If this is a larger channel, something like that, maybe there's some support in here. But I'm looking to see if we get some price action on the right-hand side of the trend line to see how that behaves. Pound dollar, same thing. If pound dollar comes into like 120, 120 to 118.50, looking to buy. Euro dollar, pound dollar behaving a little bit differently. Oil. CAD is strong today. Oil's up to 88, 83. Possibly a revisit to the highs. We put in a USO trade this week with it was an in-the-money bull put spread, and it's actually looking pretty good. I think we did the 85. Who's in my equities on demand class? Donna, you're here this morning. Gary, here this morning. Did we do an 84 by 83 or an 85 by 84? I guess I can just check the document, huh? Doy. I think we did an 85 by 84, and we collected like 73 or 74 cents on that. Did I not post it? Oh, fudge. It's in Telegram. I need to add that in. So equities on demand. We put in. We're gonna do so. We've got 7 trades today. Let's see. The straddle we managed for profit. Butterfly spread. We'll see what happens. But MRO, CTRA, URA, URNM all in profit. SoFi, CMCSA, Intel all looking good for profit. We'll spot check those for class at 10 o'clock. That's 7 credit spreads to add to the wins, hopefully. And then we took the trade on USO. It's in here somewhere. There it is. So 11.17, 11.24, 85 by 84, 74, 73 cents. Let me add that into the doc. So USO 11.17, 11.24, 85, 85, 84, 84, 74 cents, 73 cents. So small risk on the trade. Both are bull put spreads in the money. And these are both filled. VIXM, that's filled, filled, filled right there. Okay. There it is. Okay. So we did take those trades on USO. Again, we don't necessarily need to see price go all the way up to 85, but if we hit this chart alarm here around 83 and change, that should be into some profit. So we'll see if that level gets retested. Going back to US oil. Pretty well supported on the daily time frame off of the 200 moving average right there. So we broke above, retested. We'll see if we can get another push back up towards that yearly pivot around $93 to $94 on oil. Gold and silver. Gold has been on a rip. Holy shnikes. Man, this did not stop at all. Wow. Well, so much for pullback. So I was hoping we had gold at least, pushing straight up here and then pausing. But man, gold has just been on a rip. What's been kind of nice, I mean, no joke, gold has been ripping like crazy. Percentage-wise, I think it's still single digits, but yeah, 9.5% in the last like 2-3 weeks. That's a lot of gold to the upside. And then silver also starting to gain, which is nice. This helps our positions on SLV. We've got some ownership there. And again, silver and gold can move a lot with a weaker dollar. If the weaker dollar continues to push lower, if the DXY goes below 105.50, silver and gold are probably going to be good beneficiaries of that, and as well as a bunch of other currencies. Bitcoin chart alarm this morning at 30,000. We're trading at 29,641. 30,000 still a lot of wick highs, a lot of resistance there. 32,000 is really the break for the bulls. We've got to get above 32. But that maybe plays out well with some ownership in BITO. We're trading at $15 and change. Chart alarms are set. See if we get back up to 18 bucks. I'm curious what is the spot price of BTC, so Bitcoin, if we break these highs around 17.75. Let me see if I can add an alert here. 17.75. I'm curious if this is a ProShares ETF for Bitcoin. You can trade options around this, so I have some exposure through options. I also have some ownership of this. It's just a little bit different. I can use my my stock account as opposed to a crypto-based account. But I'm curious if we hit this chart alarm at 1775, what that translates into for Bitcoin. Is Bitcoin back up to 32,000? Possibly. If it's above 32,000, then just looking left, we get above 32K. Next stop to me is 48. We break above 48. Next stop is 68. If this is going to be a bull market that starts to run and stretch and get really exponentially bullish, then guess what? 100K. So again, it all depends on if we break 32,000. So chart alarms are set, right? We get into this open space, go for the highs, establish your trends, start looking at wave cycles. Maybe this is a channel. If it's going to be obedient, maybe it runs up here, hits a channel, and then uses past resistance to become support. And we'll see how, maybe efficient it is. But what we've seen before these bull markets is they just run, they run. There's kind of this herd mentality to chase and bid it up. So again, above 32,000, things get a little bit more exciting as far as those that are holding crypto and looking at some diversification. So I think somebody asked this last week, Bitcoin and Ethereum would be the two that I'm focused on. I'm really not trading a bunch of other cryptos. It's just Bitcoin, Ethereum. All right. Let's see, 1020 up. Good stuff. Any charts, any requests? Currency strength chart, we got the CAD on top. We've got Swiss and yen in the middle. Aussie, New Zealand making a run to the upside. Let's see what the SPY's doing right now. Trading at 425. Okay. I'm going to pull up some Delta traded this morning. We didn't really have a gap lower or anything like that. So, like I said, the week's already pushed about $12. Worst case is I lose 38 cents today. We might take a look at that at the top of the hour with equities on demand. If we can get, we paid like 32 to 38 cents. If I can close it out for maybe 5 or 10 cents and take a partial loss, I think that's fine, and that'll still give me, over $4 on the week. And then we'll approach it again next week. I'm trying to think, robot wise, let me see how the robots did this week. Perfect Storm closed out for 162 pips this week. Perfect Storm Pro closed out for 66 pips this week. I had a weird VPS or server disruption. I had to kind of reactivate and re-up. I mean, it didn't disrupt my trading. It just, the robots weren't closing in time because they were kind of off for maybe like a night. So there could have been like an 8 to 12 hour window of like I did not have a connected VPS. So everything's resumed. It's just a little frustrating when that happens. Pockets Pattern Pro up 70 pips this week. Okay. And then Equalizer was down for the week. Actually took a pretty big hit, 500 pips down. And again, that was probably a server disruption where the Equalizer has a stop loss. Pockets Pattern Pro and Perfect Storm does not. So unfortunately, if I had a VPS or server disruption for that account and then it opens back up, price could have drifted past my stop loss, and that ended up taking a bigger loss than it should have. So that's why I trade it small, but I don't know. I mean, sometimes I don't know. How many of you trade automated? How many of you have automated strategies? I mean, look, I'm not saying that this is intentional by brokers, but it is really frustrating when servers get changed. I mean, obviously VPS is different, but like when brokers do things, when it's like, oh, that MT4, live 2 account is going to change now to a live 1. And they force you to migrate servers, they disrupt your trading a lot of times. And that is why, even for as much as I love my robots, I still and will always trade them small. Always trade them small. Because if I was going to, live and die by every robot trade, those times and those periods of frustration where everything's migrating from one server to the next and it could cost me, I mean, like I lost 500 pips in the Equalizer. It should not have been that big of a loss, but if it's beyond my stop loss, I mean, again, that's like the risk that I signed up for. I get it. But but that's why I trade small. And that way it's like you can take the losses, just turn the robot back on, reactivate, let the robot do its thing, get itself out of a hole. But I don't know. It's not going to change. I mean, heck, I've been trading robots for a solid 5 years now, and I see the same thing all the time. It's like every 6 to 12 months, there's always something, and it just gets annoying, But just let the robots do the thing. It to me, it's a nice add-on. It's good supplemental income, but I don't live and die by all my profits are robot profits. My biggest profits are the way that I'm trading this course called Portfolio Builder, the way that I build positions, the way that I level in and trade, inefficiencies in the market. So my bigger injections of profit are really done old school. It's still discretionary trading. And if you'd like to learn how to do that, traders are in my flex room to do that. Also, real quick, I will post this in. Let me post this in the thread here. I don't know. So really quickly on this, I'm gonna set this link so it doesn't expire. If you're live in this session and you have not joined my Discord channel and you'd like to, you are welcome to. Here's my Discord link. Okay, so if you join that now, that link will work. I checked my YouTube page and I checked my Discord link that's on my YouTube page, and it shows invalid link. I updated it. I did it like 2 or 3 times, and I mean, you see me do this all the time. It's like I create an invite, I make sure that the invite doesn't expire, I paste it. I put it on my page, I put in all my video descriptions, and if it doesn't work, I'm sorry. So all I'm telling traders, and I'm leaving this in the comments as well, join me for a live session, get the link when I post it, and like, Jordan just jumped into Discord right now. Perfect. Okay. So that's probably the easiest way to jump in is join me in a live session. I'm live Mondays and Fridays on YouTube, and take the link, right? I'll try to figure out why it's not just working all the time, but whatever. Lastly, couple things here just for some housekeeping. I've said this before. If anybody's interested in some education, if you have any questions on this thread, this is my trading room. I trade Forex in this trading room, the Flex trading room for 27 bucks. It's a trial period for a month. Trade with me all month. Let's make some pips. If you want to trade Monday through Friday with me for stocks and options, this is the Equities on Demand trading room, a trial for 27 bucks. Again, it's just good exposure to trade live, join the community, see how we do it, see our process every single day. And then there's a bunch of education. Okay. This does not mean just go crazy and start buying classes. That's silly. If you have a question on these, let me know. Okay. Example, Master Flex. I run my trading room. This is like kind of my go-to indicator set, the way I like to see the markets. If you want clean, easy, wait for this, then do this, if then trading, Master Flex is really simple. Right Trader Max, same thing. There's a robot with this. There's a robot with this. Delta Trader is short-term option trading. So we trade straddles, we trade credit spreads, we trade trying to think. I mean, just long options typically if we're going for some good flow for the week. So this week we did a straddle on the SPY, we did a butterfly spread, and we did a straddle on Tesla twice actually. So it's just good week to week trading typically on the S&P or on high volatility stocks, and we have some awesome software to go with that. Portfolio Builder. This is a course I just launched. I'm looking to double my account. This is a Forex account. I'm collecting some positive rollover, looking at some big trade opportunities. This actually is how I trade longer term. Like my investors, people I trade for, this is how I trade all the time. I find good opportunities, I level in, I invest in the currency market and make some big injections of profit. I don't put a timeline on this stuff. Portfolio Builder is not about let's make, 100% in 3 months. That's insane. I'm confident I can make 100%, but I don't know how long it's going to take. The trades I'm in, the trades that when they go from start to finish, I'm confident I can double that account. Okay. So and again, it's old school trading. It's discretionary. It's manual, but these are trades that I am looking so hard to find every single year. Perfect Storm Pro, one of my favorite robots ever. It's range based. I only traded on about 8 currency pairs. It is super efficient and makes money every single week. It does actively manage a drawdown, just so you know, but your balance is going up each and every week. When it prints, 150 pips this week or 200 pips this week, awesome, right? It does actively manage drawdowns. It does sit in positions. I don't use stop losses with my Perfect Storm, but my Perfect Storm since inception. I'm trying to think. I've been running the original Perfect Storm for like 4 years, and it's up like 50% on like tiny trade sizes. Pockets Pattern Pro, another really good strategy. The way I see the market is just inefficiencies. Equalizer Pro, SPY crossing 425 to the downside. Just chart alarm went off. Equalizer Pro is good structure based. The way I'm running this one is more range. So I'm looking to basically sell highs and buy lows and try to find the market's equilibrium. And then FX Wave Rider is an aggressive trend strategy. Right Trader is the original, really easy visuals. Momentum Breakout Max is a new way to see the market with its confirmation and price. It has nothing to do with candles or Hekinashi or line graphs. It's all about where price opens, closes, and confirms, and you follow that momentum with sentiment strength line candles, which is pretty nice. Or sentiment strength lines. It's a very unique way to see the market and just follow price. It stays green longer, stay in trends longer, up or down. It's pretty sweet. And then I have a huge comprehensive video series on market structure and patterns and technical analysis, and that's the survival series. Okay, so that's education. I also threw this in here for this week. I've had this request for years. I thought a lot about this, and I thought now that I have a Discord channel, this is a good place to do it. If anybody wants private instruction, here's a good spot. So, an hour or a work day. So a full day, it's not 24 hours. That question came up yesterday. No, I'm not doing a 24-hour workshop with you, but it would be an 8-hour workshop. It'd be a full trading day. So we can trade together for the day. If it's something that you don't want to shadow in my trading rooms, you want one-on-one attention the entire time, then we can block off a few evenings and knock this out, or we can do it for a weekend. But I just want to make sure that traders out there that need help, I don't care what you trade. You want to trade stocks, you want to trade options, you want to trade futures, you want to trade forex, you want to trade CFDs, you want to trade crypto. I don't care, right? I just want traders to be comfortable with what they do, how they diversify, how they make money, and just it's a process. So if my one-on-one instruction can help, I'm happy to help. I've had that request for many, many years, and so like I said, this is a good spot to do it and offer it, and let me know. Okay, so 425.25, that straddle is now at $4. So anybody and most people probably closed out with me yesterday because I posted the alert and we grabbed a few bucks out of it. But if you're still in the trade, we paid $2 and change for it. Now it's up to $4. So that would have been right here. That straddle was $2.42. Now it's paying $4 and change. So I made 73 cents yesterday. Now it's up $1.60. So why did I not hold the trade longer? Well, because it was already a good week and I like to protect it and I don't like to put a lot of pressure on my Fridays if I don't have to. So that is that. Chris says, what currencies do you trade a perfect storm best three? It's funny you say that because everyone asked that exact same question. The currency pairs that I trade the most that I would say like no brainer would be the Aussie CAD, the New Zealand CAD, and the Aussie New Zealand. Those would be my top three. Those are my top three. Now, and I put them in that order because like Aussie CAD, New Zealand CAD are really, really efficient. They're great. Aussie, New Zealand, it's still highly efficient, but it has these phases where you'll get like these 300 to 400 to 500 pip runs, and obviously I still pay attention to the bigger time frames, but there will be periods where it's like, my gosh, man, my perfect storm's in like a drawdown in the Aussie, New Zealand, and then give it a month or 2 or 3 and it gets out of trouble and then it keeps trading and makes a bunch of money. But those are my top 3 right there. Pretty easy to trade. Why I like those currency pairs? It's commodity versus commodity. So there's a lot of efficiencies in there. They find a lot of pivots. We hit highs, we hit lows, we score a point, we pull back, and that lets that system do pretty well by making some quick gains. Yep. So I hope that helps. And I like I said, I think for the max deployments, I have about 8 currencies. That's it. And that's intentional. I do it that way because I don't want those robots to get into trouble. I know that they're going to manage some drawdowns, but I'm going to try to keep the drawdowns really tight. Let the currency pairs do what they need to do. But I don't trade a lot of dollar crosses. I don't trade a lot of yen crosses. I don't trade a lot of currency pairs that like to go crazy and trend a lot. That's the whole point of that strategy. Okay. All right. It's 10:04. I got to run. Any questions for me? Let me know. I posted the Discord link. I had a couple people join, so welcome. So Jordan, welcome. Scotty, welcome. RJ, nice to see you. And again, this free group chat is for you. So feel free to start, throwing in some questions, comments. Everything's here to explore. When I post my YouTube links are right here. Blog, Twitter, what I see in the markets. I'm as active as I can be in this during the week as well as running, all the classes and trading rooms that I run. But like I said, last couple weeks, adding the education pieces. If you have questions on that, let me know. Private instruction, we can connect, privately and get everything scheduled. And I think that's again, I want to work with traders in any capacity that lets me help. It's like I know that this is kind of a one to many. It's me talking, and a lot of people, follow what I do. But again, it probably helps to see what is best for you. What are you trading? What's the capital? What's the account size? What are we working with? You trade automation. What are your assets? So anyway, stuff like that. But that's why we're here. Okay. Do you have more pairs trading consistently? Yes, I said I have 8 pairs, Ted. I have like 8 pairs trading. So, and what's funny is I get this question all the time. What's the best deployment? Honestly, I go back to what I deployed 4 years ago and I go to the exact same thing. I have made 0 changes to Perfect Storm. The original Perfect Storm is trading the same 8 currency pairs that I deployed 4 years ago. The Perfect Storm Pro is trading the same 8 pairs, but it's just better at drawdowns. It manages trades a little bit differently. It has more confirmation. It scales out, or it will get in a little bit. I need like 3 filters on the Perfect Storm Pro, so it will manage drawdowns a little bit better. But again, it's just they're awesome robots. And for years I've let them run, and just every single week it's like, how many times do we talk in this? I mean, every week we're live on YouTube for the most part, right? Or a video update, and I spot check my robots. I mean, every week it's like, yep, up 100 pips, up a couple hundred pips. And when we have a big week, we're up like 3, 4, 500 pips. So it just continues to do pretty well, which I like. Okay. All right. I'm going to switch this off, head over into Equities on Demand, the trading rooms. Thanks for being with me today. Happy Friday. Happy trading. Lots of profits. I'll be back on Monday at 9:30 a.m. Eastern Time. And look forward to seeing everybody in the Discord channel. Say hi, say hello, ask questions, and be engaged. Okay. Have a great weekend, everybody. I'll see you then. Thanks. Bye.